Hey everyone, hope you're well and having a good start to the weekend. Thanks for joining me. My name is Ben, and today I wanted to go over another company metric that we can use to potentially help us evaluate a particular company we're looking at. In this case, we're looking at the earnings per share, also known as EPS, and how it's calculated and how it can be used. So the best place to probably start would be the beginning, and in this case, what is an EPS? So earnings per share is a quick metric you can use to ascertain the profitability of a company. Generally, you're looking for a higher number across here, and that's because the EPS figure is brought about by taking the company's profits and then dividing it by the company's outstanding common stocks. This will give us an indication of roughly how much money the company makes for each of its individual shareholders. And as mentioned, the higher the better, because that means the company's making more money for each of their shareholders. So what does the formula look like? Well, this is what the formula looks like. And as we can see from the formula, the EPS equals the net income minus the dividends. And then we divide that by the outstanding common shares. To calculate the EPS, you will get these figures from the balance sheet and also the income statement, as they vary from company to company, obviously. And if you didn't want to make it yourself, you can go and find this information on online platforms like Yahoo Finance. The EPS is one of the most valuable metrics of a company, and it is used in multiple formulas to assess the company's value. It is also the critical figure used within the company's PE ratio. If you wanted to learn a little bit more about PE ratio, I have a video linked down in the description below, so feel free to check that out after you finish this video and smash that like button. Generally, comparing the EPS in absolute terms isn't as valuable to us as investors, and this is because holding common shares, we don't have access to all of the earnings for each share. We can, however, compare the EPS with the share price of the stock, and this will determine the value of the earnings and also generally how investors feel about the future growth. You may see across your investing journey two different types of EPS, the first one being basic EPS and the second one diluted EPS. So what we just looked at was basic EPS for a company. However, the other option is to use the diluted EPS. The reason for this difference is the basic EPS does not factor in the dilutive effect of any optional share dilution and shares that the company can release in the future. The diluted EPS includes all of the potential outstanding shares. What this means is if a company has multiple options to raise capital from the release of further shares, this is included on the assumption they have released them. This will essentially give you a worst case scenario figure for the EPS, and it's then up to you to choose what figure you would like to use or a value in between the two. An important aspect of EPS that is often overlooked is the capital that is required to generate the earnings in the calculation. What I mean here is two companies could generate the same EPS, but one could do so with a lot fewer assets. That company would in theory be more efficient at using its capital to generate its income, and therefore would be a better company in terms of efficiency. There is an alternate metric you can use to identify companies in which are more efficient. However, we will touch on that future, so make sure to hit the like button and subscribe so you catch that video when it's out. Now, as an example, let's look to generate an EPS for Facebook based on their information from the 2020 December release. Facebook had a net income of 29,146, and they currently don't pay a dividend. We can then take that figure and divide it by the outstanding shares, which comes to a total of 2,851. This brings us with a total EPS of 10.22. If we compare this to the diluted EPS for Facebook, we can see that we do the same calculation. However, we change the outstanding shares to 2,888. Which then factors any of the additional shares Facebook can release over their lifetime. We run the exact same calculation. This brings the EPS out to 10.09, which is a reduction of 0.13, and this gives us the worst case scenario for Facebook shares. Now, EPS can be useful, as mentioned, in a fair few calculations, but as always, there is unfortunately a few issues present. One issue is that the shareholders can't access the EPS attributed to their shares. Because of this, the connection between the EPS and the share price can be difficult to define. This is particularly true for a company that doesn't pay a dividend. The actual notional value of EPS also seems to have a relatively indirect relationship with the share price. For example, the EPS for two stocks could be identical, but the share prices may be wildly different. Investors will generally find comparing EPS and share prices between industries and groups relatively difficult in the comparing. That's my introduction to EPS and how to work it out. A lot of this information can be found online through services like Google and Yahoo Finance. If you wanted to work it out personally, you would be looking at the income statement and balance sheet. However, places like Yahoo Finance will just list it directly there for you to access. As mentioned, it's used in multiple formulas such as the PE ratio, and if you're interested in looking into the PE ratio, there's a video here that you might be interested in, so feel free to click that. And until next time, remember to invest, save and subscribe.